Okay, hello everybody and welcome to AiCoinPal's support and resistance trading strategy that you can easily use with integrated tools at AiCoinPal.com. So this would be the support and resistance trading strategy that is already known to many traders and giving us the opportunity to trade and use the tools in and with the support and resistance areas. Now in this video we'll go through how you can detect a support and resistance area and how you can set up a trade according to that support and resistance area. So right now we're looking at a 1 hour chart. Although these support and resistance areas apply to 5 minutes and they also apply to 1 hour charts as well as 4 hour charts. We'll be looking at 1 hour chart at the moment. And see here with the naked eye we can see that there is a trending support area around here. This area indicates that it's actually really difficult for the market to fall below the trend line, and it has supported for four times already. So what we can do, we can set up a trading rule for this type of trading. And what we can see here is also a resistance line. A resistance line over here. Now, sometimes it's really difficult to detect resistance lines and support lines, but there are markets on which you can really easily detect them with the naked eye. And right here we can see another moving upwards trend line is also here. Drew it a little bit imprecisely, but it's around here. As you can see, market supported 1 time, 2 times, 3 times, and a little 4 times. And of course there is another trend line over here. So, but these do not seem to be so relevant and corresponding as this trend line, like 1, 2, 3, actually 4 times, 5, 6, 7 times. So this gives us a nice trading opportunity right here. Now, another thing is what we can look upon is what could be the possible outcome of this trend line. So a trend line forms only where there are 2 or more bottoms supported on a trend line. So basically you could only detect a trend line only after here, after this area here, which could be this area right now. So at this moment, for example, if we were not to know the history, the future of the price action, we could go a little bit deeper in this price. For example, we were not to know whether the price would move upwards or downwards. So in this case, there would be a resistance zone over here. Because this price area was rejected 1 time. Well, you could say 2 times and 3 times. And when the market fell down to a support area, you could use the measurement tool to see how much potential profit lies there. So we here see that these are approximately 8%. So what this means is that there is a chance for the market to go upwards by 8%. I would call it a safe chance. Although market does slide upwards and downwards on the way to the resistance area, we can see that there is an 8% chance, meaning that this could be and could end up as a as a positive trade, as a trade that we could enter and get, let's say, a useful amount of profit. And also, why is this support area? Is because whenever a market breaks above the resistance area right here between the two highs, it then supports back on those two lines. Not always, but there are cases when it supports, indicating that this could be a double support area. This could be a nice chance of opportunity. As you can see, the same applies to this line here, that this support level is here as well. So this indicates us that this could be a possible and a good trade position that we could enter. Now, for example, if we have decided that we want to enter in this scenario, what we can do is we could create an AI automated trading signal. What this means is when you click create a trade, you then can choose the amount on which you want to trade. For example, in this case, the system is telling that the minimum amount for a trade is $11 for this market. We only have $2.73 in our free account. In this case, I will create a simulation trade, and I'll use 50% of my strategy group's capital right here. So, and then when you have set out the amount which you want to enter the trade, this will tell you how much dollars you are placing on a trade, so you don't have to worry about whether the Bitcoin or prices are different. You can easily pick out how much dollars it could be. So unclick the buy instantly, and you can see here there's a buy lower option. Now keep in mind that if we were not to know the price movement afterwards, the price has lied down, or the price would be somewhere here, or the price is rejecting here, and you decide to make a quick trade. You draw the diagonal line on these bottoms right here. Of course, sometimes you cannot draw the line precisely, and that's what always happens. You can make the line with approximate precision. So you could place a trade on the price levels at the right side. You can see here is 0.016 approximately, 0.01580, and 0.01550. So for example, we would want to make a trade on 50-50. And then we remember that this was almost 8 to 7% of volatility over here. So then we can use the AI backtested trailing stop loss strategy. What this strategy is specially set up for our users means that the price will be trailed with a 2% target, meaning that if a price goes upwards by 2%, the profit will be locked over there, and if the price continues to rise, the profit will be locked again and again, meaning that using a trailing stop loss strategy, as we provide right here, a 2% trailing stop loss strategy, would ensure you also a chance. If the price breaks out, you will get more and more profit. So this indicates, and this usage will not only give you at least of a 2% profit guarantee, but it will have a chance for you to get even more than those 8% which were estimated right here. Of course, the market can also fall down, so that's why we never recommend for traders to use all-in trading strategy. If the market falls down to next support level, it could indicate that you can buy and create another trade. So this is all up to you, how you manage your risks, how you manage your trading. But in this case, let's say we have created a trade and we want to simulate our trade. We click the simulation mode. If we want to do live trading, we just uncheck the live trading, the simulation, uncheck the simulation to do live trading. The system is telling us that at this moment we don't have enough of free capital for this trade. So what it means also is you can create several buy lower areas. You can create and place several. And when you will have free capital, for example, if another trade frees up by that time, and you have capital already that you can use, and that same instance afterwards, a support level is filled by another trade that you have placed, the system will automatically buy that trade. It will not give you an error that you don't have enough capital. So what it means is you can overbook your capital ahead in front, and if you will not have capital at that moment when a trade is about to execute, you will receive an error. But if a capital will be freed at that point, you and the system will automatically create that trade. So now that we have filled in everything, we can create a trade by placing a trade, and the trade is already submitted. And AiCoinPal executes trade in less than 1 to 3 seconds. So what happens at this moment is the system will automatically monitor your trades, and when the price will fall down to this area, the system will automatically buy and enter your trade and fill in the rules you have. So now let's talk about risks, what can be involved and what can happen. So the first thing is that there is a chance that system will not buy your trade if you do not have capital. So you always have to manage your budget. You can see the amount of budget free you have here is, you have, at this case we have $2.73 free, and we have 0.0006 bitcoins free. And overall we have $1,900, and overall we have 0.23 approximate bitcoins free. So we have all our budget of $1,900 placed on trades. So when you make a deal, you can see how much free capital you have to enter the trade. We do recommend using strategy groups, because a strategy group will automatically determine how much budget you have set up for a group, and they can automatically determine how much free budget you have for a trade. So this how you will never have unplanned budgets, and you will always have a spread out budgets, equal budgets for each of your trades. So trading is not about, hopefully it's about getting it right all the times, but there are of course times where you fail, and you will fail if you play out a strategy over and over time, but you will succeed if you manage and balance your risks. So what this means is that buying at support levels, there is a 60 to 40 chance for the price to go upwards, and there is a 40% chance that the price will go downwards. If you spend a smaller budget here, and if the price falls down to the next support area, you can enter the trade with a larger amount and hope for a quicker rebounds to the previous resistance area. So planning your budget and planning your strategy is about planning risks and seeing the probability. If you were to place a fixed target right here, you were to lose the chance for the price to go in upwards. That's why we always recommend users to use trailing stop loss strategy. So it's more about how you plan your trades, it's more about how you plan your risks, and this is the key of becoming a successful trader. Now, even if you were to use a stop loss of, let's say, 5%, and the potential target is 7%, potential target. In a case where there's a 60 to 40 chance, if you have backtested a certain time frame strategy, if there's a 60 to 40 chance, and you were to get 4 to 5% on a trade and lose a maximum of 5 to 4% on a trade, you still will end up profiting. And using a trailing stop loss, you can end up of few or couple of your trades to get not only the approximate amount of 4 to 6%, depending on the volatility of the market in that area. You were to get 8, 10 or maybe 12% more on average. So even if 1/10 of your trades managed to break out afterwards, you were to get even more and more profit from it. So it's all about managing your risks and the probability. Now let's look a little bit further. Now here the price, as you can see, is squeezed in between the resistance and support area right here. And you can see the resistance was rejected one time, 2 times, 3 times, 4 times, you could say 5 times, 6 times. So this definitely is a strong resistance point, and this definitely is a strong support point, support level. But what you can see right here is that the gap between is only 4.47%, meaning that there is a small gap between, giving you a small chances of a purchase and do a small profit percent. So entering trade in the middle would end up even a 2% target, which is a small comparing of the risk that you can get if the price falls down. So as you can see here, that also the volume gets smaller and smaller. So what you can see here is that not many traders actually enter these trades seeing the small potential, but of course there are chances that the price would break out. So this is up to you how you can manage your risks in such a trading, whether this trade is more positive for you, whether this trade isn't that much of a trade you are interested in because of the small percent probability that we can get, profit probability that we can get. Now we just shifted to 4-hour chart, and we can see we have a much greater resistance area right here. This can indicate also that the prices or entering a trade here can become risky. Well, when the price action would be here and we would see such a chart that the trend has supported for a longer period right here at these support areas, it has started to going upwards, creating a trend, a diagonal trend support area right here. At this place it would be beneficial and highly probable to enter a trade because the stronger resistance areas are way above. So this could lead up to a high probability trading if we were to enter a trade here. Now if we were to look back in this squeezed in situation, we of course can make a trade right here using a much smaller trailing stop loss strategy that we have backtested. Also the trailing stop loss strategy of 0.5% backtested strategy, meaning that there is still a little roof for the price to go upwards, the same as here. They went upwards but they didn't reach the resistance area. We could get and we could try to go for 0.5% at least and have a chance of a breakout. Now, but this is not a buy area, this is not a buy zone. So what you could do is you could place a buy lower at 1934, as we did earlier in the previous minutes of this video. So this is a way how you can use the support and resistance line strategies